Good evening, ladies and gentlemen. Welcome to the IRB Infrastructure Developers Limited conference call for discussing the financial results for the quarter ended September 30, 2024, along with recent developments. We have with us on the call today Mr. Virendra Maisekar, Mr. S.S. Rana, Mr. Sudhir Houshing, Mr. Anil Yadav, Mr. Mehul Patel, Ms. Poonam Nishal, and Mr. Tushar Kavedia. As a reminder, all participants' lines will be in the listen-only mode, and after the opening remarks by the management, there will be a question and answer session. Please note that the duration of the call would be 45 minutes, and any queries left unanswered after the call can be subsequently mailed to the management for adequate response and resolution. Please note that this conference is being recorded. I now request Mr. Yadav to give an overview for the significant developments during the quarter. Thank you, and over to you, sir.
Thank you. Good evening, everyone. I welcome all the investors and analysts to our earnings call for Q2 financial year 24-25. I trust you have reviewed our detailed numbers and presentation. I will briefly highlight the key points for the quarter. We are pleased to inform that IRB successfully completed the TAB issuance and allotted $200 million 7.11 senior secured notes having a final maturity in FY32 at a premium. Proceeds of the notes will be utilized for capital expenditure and or refinancing of the existing loan availed for the capital expenditure. This will further strengthen our liquidity position, thereby ensuring business stability. Being the issuer, IRB was rated Ba1 and BB+ by a reputed international rating firm, Moody and Fitch respectively. We have received an encouraging response with participation seen from the marquee investors like BlackRock, Lombard, and HSBC, T. Rowe Price, PIMCO, BFAM Partner, Wellington, Goldman Sachs, etc. The notes are listed on India International Exchange Limited, that is India INX. Now moving to the performance for the quarter. Toll collection for the quarter was significantly impacted due to heavy rains across India, with many states witnessing their highest rainfall in this monsoon, leading to flooding. Despite of the impact of the heavy rains, toll collection has shown a growth. The Mumbai-Pune and Ahmedabad-Vadodara corridor reported 2.3% increase in daily toll collection from 6.25 crores in Q2 of FY24 to 6.40 crores in Q2 of FY25. In the view of the forthcoming festive season, we are optimistic about sustaining the growth driven by the increased travel and economic activity. The second half of the year typically is much better for a toll collection perspective. From a toll collection perspective, for private InvIT, the per day toll collection has increased to 9.94 crores for the quarter ended September 2024, as compared to 6.82 crores per day for quarter ended September 2023, recording a growth of 46%. This increase is attributed to traffic growth, toll tariff revision, and addition of the new project. Private InvIT has generating positive cash flow since last financial year and has declared a distribution of 64 crores in Q2 of FY25, which will reflect in the IRB's cash flow to the extent of its holding, that is 51% in the coming quarter. In line with our dividend policy, company has declared an interim dividend of 10%, amounting to rupees 60 crores. The total order book now stands at 32,600 crores with a EPC order book approximately 4,000 crores. Next 2 years executable order book including EPC and O&M is close to 6,200 crores, excluding the change of scope and utility shifting. CRISIL rating has affirmed its rating CRISIL AA- stable rating for long-term credit facility of the company. Long-term opportunity in the sector NHAI has announced the plan to double the national highway from 1 lakh kilometer to 2 lakh kilometer at an investment of almost 50 trillion over next 80 years. Considering the existing high leverage, the authority is likely to increase their portfolio of projects that are being awarded on PPP basis. We expect around 40% of the plan will come approximately around 20 trillion on PPP mode. Even 10% of the market share in the proposed PPP would mean addition of 2 trillion worth of project for IRB portfolio over the period of 8 years. IRB has transformed into self-sufficient powerhouse poised with the continued growth and leadership fortification. Our cash flow generation strategy, fueled by asset monetization, two InvITs, and asset churn, that is the best approach, that is bid, execute, stabilize, and transfer. Supported by our extensive asset portfolio and prudent long-term leverage management, will enable us to triple our portfolio over the period of 6 to 8 years, building on the established asset base of in financial year 25. As of now, we have asset base of 80,000 crores. In terms of near-term opportunity, a large pipeline, approximately 37,000 crores, comprising of BOT project and 4 TOT projects, is already lined up. Although the bidding and awarding process has been slow, we expect it to accelerate in the second half of the current year. With a lower consolidated net debt to equity, we are well capitalized to tap into these opportunities, which will include the significant portion of BOT TOT project in the partnership with GIC affiliates and Centra. We are well prepared and in a strong position to actively pursue these opportunities. We will bid for BOT TOT, which will be executed through private InvIT, reducing our equity requirement to 51%, approximately 15% of the project cost. Now I will request Tushar to cover the financial highlight for Q2 of FY25. Over to you, Tushar.
Yeah, thank you, sir. So I'll just take you through the financial analysis of Q2 FY25 versus Q2 FY24. The total consolidated income for Q2 FY25 was at 1,752 crores from 1,875 crores, down by 7%. The decrease in the construction revenue is mainly on account of the heavy monsoon across all states. The consolidated toll revenues for Q2 FY25 has increased to rupees 600 crores from rupees 588 crores for Q2 FY24, registering a growth of 2%. The consolidated construction revenues for Q2 FY25 decreased to rupees 1,152 crores from rupees 1,286 crores, down by 10%. EBITDA for Q2 FY25 slightly increased to rupees 933 crores from rupees 924 crores, registering a growth of 1%. The interest cost remains stable at rupees 434 crores in Q2 FY25 from rupees 435 crores in Q2 FY24. The depreciation slightly decreased to rupees 231 crores in Q2 FY25 from rupees 233 crores, and the PBT has increased to rupees 267 crores as against 257 crores, an increase of 4%. PAT after share of JV from JV of rupees 84 crores has increased to rupees 100 crores in Q2 FY25 from profit of rupees 96 crores in Q2 FY24, an increase of 4%. The cash profit has increased to rupees 415 crores from rupees 404 crores, an increase of 3%. Now I request moderator to open the session for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, you may press star and one to ask a question. The first question is from the line of Alok Deora from Motilal Oswal Financial Services. Please go ahead.
Hello, sir. Good evening. Sir, just a few questions. First is on the execution, which has been pretty soft, even on a YOY basis, if we see. So just wanted to understand what's happened here. It's just because of the monsoon or any other reason also could be attributed to this, and how has October again been for us, and whether this could continue a little bit in 3Q as well?
Thank you, Alok. And as I have discussed in the opening remark, because of the very severe rain, and some of the state has even seen the highest rainfall in this monsoon. So that has led a lower execution as far as EPC is concerned. And even the toll revenue were also on the softer side.
Yeah, and on the next part, the execution is now picking up because the monsoon is now over, and we will see a good uptake in the construction execution in the third quarter.
Sure. And this just couple of data points. The other income has jumped quite a lot, even QOQ and YOY. So what's any one time included in that?
So as we discussed last time also, there is a fair value gain impact in the other income, which is falling on account of the fair value of deferred consideration receivable from the private InvIT. So it's the one-time impact of that particular element.
Sure. And on this share of profit in associate, that has actually the losses have widened in 2Q. So so that would normalize ahead, or just wanted some color on that?
Yeah. So Alok, if you see the second impact, because this fair value impact goes in the private InvIT, and then it comes as a share of JV. So as such, this is one time impact what we are observing in this Q2. This will not be a normal, this will not be similar going ahead. But yes, whenever there is a deferred consideration fair valuation accounting, that time this comes as a share of JV in the private InvIT as well, from a share of.
Alok, just to add what Tushar has said, if you refer our corporate presentation, we have provided the impact of fair valuation in our first slide that includes the result. And if you will adjust for the fair valuation loss from Q2 of FY24 and Q2 of FY25, the loss from the private InvIT remains at a similar level, in spite of 3 projects is being added in this financial year, which was not fully there in the last financial year. That was the Hyderabad ORR and TOT 12 and TOT 13. And as you are aware that any project which gets added, there initially 1 or 2 years, those generate the positive cash flow, but because of the amortization, there will be a losses. In spite of the 3 projects getting added, there is no increase in the losses from the private InvIT.
Got it. Just one last question. So you have again in the presentation highlighted the bid pipeline and across toll and TOT. So just wanted to understand, we are already at October end now. So have projects started coming up, and have we started bidding? Are there projects where we have bid and outcome is not come yet, or it will mostly come from December onwards?
So, Alok, you are right. This is a concern the entire sector is having on its mind. And if you see, only one TOT has so far seen actual bidding going through. And the other 4 TOTs are now likely to happen between now and end of December. And the BOT projects also have been getting postponed, and we now expect few of them to get actually bid out in the third quarter, assuming no further delays are lamented by NHAI on this. So I would say that it is moving in a similar direction what we have seen in the last couple of years, where the bidding activity escalates significantly towards the end of the financial year.
Sure, thanks for that. But we are not changing our order inflow targets or guidance or anything of that sort.
No.
Got it. Got it. That's all from my side. Thank you and all the best, sir.
Thank you.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. The next question is from the line of Deepak Krishnan from Kotak Institutional Equities. Please go ahead.
Maybe just one question on, so you indicated that EPC revenue pipeline for next 2 years is, so 60 to 100 crores. We did about 4,900 crores in FY24. So in case, there are sort of no wins, how are we looking at EPC revenues for this particular year, the construction revenue for this particular year, as well as sort of, FY26?
Krishnan, as the order book is around 6,200 for a couple of years, and we also get this order is excluding the utility shifting and change of scope, and typically ranging from 200 to 250 odd crores is the typical execution for COS and utility shifting work. So depending upon that work, one can assume an order book of around 7,000 crores to be executed over the period of 6 quarters. So I think we have a visibility for next 6 quarters. But considering the doomsday situation, if we don't get over the period of 1.5 years, will not get the order book, then definitely that time EPC will reduce. But just by that time, our O&M revenue itself will be roughly 2,500 crores from the O&M contract, which we have a 20 years visibility. So we have a 6 quarters visibility, and thereafter we have visibility in terms of O&M revenue. It will not happen that our revenue will become zero. The EPC revenue will be reduced to 40 to 50%, but we are hopeful that we will back the order, and we should be able to grow our EPC in the line of growth what we have shown in the past.
Sure. And maybe just wanted to understand, till what time would we sort of continue to see losses from associates? Like, what are we expecting for the full year? And, when does this sort of impact of fair value go away and the impact of all the new assets come through, and we start seeing, we are seeing cash flow, but we're not seeing profitability. When does that start showing up in the associate line being positive? Is it FY26 or would it be FY27?
I think FY26 it will become a positive.
I think you are very right, and you have touched upon a very good question. What is happening is these investments today reflect at book value, and the real value that this portfolio is generating is not getting duly captured in the essence of the results, to my mind. And the company is working on this because the cash flows are very robust. As you know, that we have already started the distributions from this platform. So we are working on it. I think you should see results on that lines sooner than later.
Sure. And any impact of this new change in toll collection norm moving to satellite-based toll collection with first, I think, 30 odd kilometers, no toll collection? Does this impact us in any way, or there is no sort of financial impact?
None of the things which you mentioned have become operationalized. These are all academic discussions underway, and none of the toll notifications of any of the projects have seen any change. And to my understanding, these are all futuristic thought processes. The new software or the new technology is much in a primitive testing mode as of now. So it will take some time for that to happen. And as the outcome of the FASTag has been extraordinarily good for the company, we believe the new technology also will further add value to the portfolio going forward.
And in terms of the reform, what has taken place in the sector, whether we call it moving from WPI, tariff revision linked with the WPI, and thereafter 3% fixed plus 40% of the WPI, all the changes were with a prospective effect. So ideally, we assume that the changes, whenever will happen for the new project to begin with. And secondly, the concession agreement provides adequate compensation in case of there is any change of the regulation.
Sure. And just one other thing, the one-time impact of fair value, how much would that be? If I look at QOQ, other income is up by 47 crores and, the loss is up by 30 crores. What would be sort of the one-time impact in both of them?
So for this quarter, it was around 80 crores, one-time impact in the IRB results.
Sure. And part of it gets obviously adjusted out of the fair value, the associate. Yeah.
Yes, that's right. That's right.
And so I think we've sort of already touched upon, but do you kind of see acceleration of bidding happening in second half? Do we sort of finally see, all of these awards picking up substantially? How are we looking at it from, or are there still some uncertainties? Are we at a place where, L1s are about to be awarded, or do we still probably think that L1 gets awarded 2-3 months?
So we are tracking more of the BOT and TOTs, and in that we can say that there are 4 TOTs lined up for bidding as per the present date before end of December, and there are 6 to 7 BOT projects which are also up for bidding, which are likely to happen between now and March. So there is a good visibility, and see, you have to understand that all these BOT projects which have come after a long time for bidding involve a lot of queries and clarifications that have to come from the client, which are being asked by the prospective bidders. And that entire exercise of understanding the project much better before we put in a bid is what is taking time and pushing the dates of submission forward. But I can say that in majority of these 6-7 bids, most of the iterations are wanting to understand the nuances of the project, more clarification on the scope of work and timelines, etc., have all been iterated now, and we don't expect further more delay in the date of submission now. That's why we believe that between now and March, these 6-7 BOTs and 4 TOTs should see the end of the tunnel.
Sure, sir. Those are my questions, and best of luck for future quarters.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Parikshit Kanpal from HDFC Securities Limited. Please go ahead.
Yes, sir. Hi. Congratulations on a decent quarter. Sir, what will be the sizes of these BOT assets which are coming up for bidding?
Parikshit, the bidding size of the BOTs are in the range of 4,000 to 7,000 crores each.
Each is 4,000 to 7,000.
I will not be able to give you a number because that is the upfront number what we have to quote. But these are decent sized TOTs as well.
So each BOT project will be 4,000 to 7,000 crores, and the equity requirement will be almost 1,200 to 2,000 crores for each project.
Yes, and as you will appreciate, our requirement falls to 51% of that.
Yeah.
And we are very well capitalized because we will be partly redeploying the construction profit back to fund our share of equity. So we are quite comfortable in terms of our ability to fund the equity for the project that may come our way.
And how do you envisage these? I mean, will this be on a positive listing like revenue share with NHI, or do you think there could be some grant elements? So how this new bidding which kicks in, so how do you read into these bids?
Very difficult to say because each of the bid will be different, but largely it will be grant projects.
You're expecting it. So, but not touching 40% types grant. I mean, maybe much smaller grant.
The limit is 20% now. The contract provides for highest grant of 20%.
So 30% is the highest and 20%?
20% is the highest.
Okay. So now we have, I mean, this will require huge outlay, and even we are bidding for TOTs. So in that sense, how do you, between private and where, so where the assets are getting matured, so how do you look at monetization internally? Because TOTs will not give you much of value addition as BOTs, because BOT bring in a construction element and then you reinvest that profits into equity. but since you're also following both the paths, so how do you now look at monetization of the private InvIT assets, especially the ones which have now some history or nearing maturity with some stability on revenues?
You have touched upon a very valid point, and even at the risk of jumping the gun, I would say that yes, we have been working on a BEST policy, as we have always articulated, which is bid, execute, stabilize, and transfer. And while I will not be able to give you a detailed color on what is underway, we are seriously working on this strategy so as to ensure that we at all times will have enough resources to tap the upcoming TOT opportunities and bid on them. And you will see more color of what we are trying to say here in near future in terms of our strategy to rise to this requirement of Government of India wanting to do asset monetization, and we will be positively supplementing and supporting this initiative.
Okay. So, sir, how many projects do you think realistically you can win? I mean, there will be limited competition given the sizes are humongous. I mean, we have never seen, we rarely see this kind of sizes coming in. So what kind of appetite do you think IRB can have? You have a partner, obviously, but do you think in terms of order inflows, how much can you take in a financial year?
So Parikshit, no cost is attached to wishing. So definitely we would like to retain our market share that we presently command, which is 34%.
So these 5-6 projects, each is about 7,000, so 35,000 crores. So you're saying about 10.
No, I would refrain myself from putting a maths and a number to it.
But guidance-wise, order inflow guidance-wise, I mean, how much?
Please do not take this as a guidance, but I am giving you a roundabout strategy what our wish list would be.
Okay. Sure, but we have that kind of appetite. I mean, if we get 2-3 projects 100%. and we need to invest 4,000 crores of equity, so that is like enough bandwidth on our equity side to do that, take up that.
100%.
Okay, sure. Sure, sir. Thank you. Those were my questions, and wish you all the best and happy Diwali. Thank you.
Happy Diwali to all of you as well.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Prem Khurana from Anand Rathi Group. Please go ahead.
Yeah, hi. Thanks for taking my questions. Am I audible?
Yes, Prem, go ahead.
Hi. So, sir, I mean, most of my questions on the quarterly results are already answered. So, I mean, I had 2 questions on the observations from the annual report, and if you could help me understand those. One was our deferred consideration for stake sale seems to have gone up. Now, I mean, we have not transferred any new assets, right? I mean, these are all old assets which were transferred long back. Why would we see any increase in the deferred consideration? I mean, I was under the impression ideally this should come down because, I mean, yeah, she was ruled in our favor. So I thought, I mean, that money would come to you, and which is where the number should ideally come down over a period of time whenever you get to have that money come to you. But the number seems to have gone up. And second thing that I want to clarify was, so when I look at the investments part, some of these assets which are with the private InvIT, we seem to have infused money from our balance sheet. I mean, it's shown as a part of subordinate debt, 1,700 crore rupees in Westco. I mean, there are multiple entities. So, I mean, why would you invest directly in these SPVs as subordinate debt? Ideally, I mean, it should have gone to private InvIT, and then private InvIT should have invested money, right? If there was any requirement, why would we use our balance sheet to kind of do that?
So I think, Prem, with first question, as you are aware that the deferred consideration were accounted on the discounted basis, and as we are moving closer to the receipt date, automatically the amount will increase. And with respect to ADC Aurangabad, you are absolutely correct that we have received arbitration award of 1,700 crores plus, and plus the extension in the concession period. But that amount is yet to be received from the NHAI. And once we will receive that, then automatically that amount, the deferred consideration will get reduced. Now, coming to the funding of the private InvIT, if there is a delay in terms of rights issue, because rights issue requires timeline, filing of the prospectus with the SEBI and other stuff. So meantime, sometime we infuse the money directly to those SPV, and once the rights issue is done, they pay us back. So that may be the reason. But you have, I think, if you have any further question, we can discuss this offline, and we can provide the further detail.
Sure, sure. I mean, I'll get in touch with you offline for this. Thank you, and all the very best for future, and wish you a very happy Diwali.
Thank you, Prem. Wish you the same.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question.
I think there is no more questions. We can do the closing remark and conclude the call.
Okay. I would now like to hand over the conference to the management for closing remarks.
Yeah, we'd like to thank all of you for being on the call today, and we would like to wish you all a very happy Diwali and a prosperous new year ahead. And we look forward to have you again with us on the next update of the company very soon.
Thank you. Ladies and gentlemen, this concludes your conference for today. We thank you for your participation and for using research-based conferencing services. You may now please disconnect your lines now. Thank you and have a great evening ahead.